Hello, good morning, good afternoon, good evening to you wherever you are in the world, and welcome to our webinar, How to Expand Your Australian or New Zealand Business to the United States, brought to you by HPC Accounting and Tax. I'm your host, Blake Oliver. I am the head of technology and marketing here at HPC. Here's a little background about us. We are an online accounting, tax, and advisory firm with more than 23 years of experience. We provide outsourced accounting, virtual CFO, tax, and technology consulting. We have offices in Atlanta, San Francisco, and Los Angeles, and we're also a Zero Platinum partner. And if you want to learn more about HPC, you can visit our website at hpccpa.com. Before we begin, I want to say a big thank you to our software partners. Thank you to Xero and Receipt Bank and Spotlight Reporting for helping to get the word out about this webinar. These are all applications that we use extensively here at HPC and in particular for global small businesses. And we'll talk a bit about that more later on. Before we begin, a bit of housekeeping. This is designed to be a panel discussion with questions throughout. We have 10 topics, an average of 5 minutes per topic, and all the attendees are on mute. So please feel free to post your questions as we go in the chat, and we'll do our best to answer them as we go. And the links to the recording and the slides will be made available to you via email after the webinar, so don't worry about taking notes. And future webinars are going to be more in-depth about each of these topics. We're covering 10 topics today, 5 minutes each, not a lot of time. So we are going to have future webinars about each topic and dive in more detail. Before we start, we also have a disclaimer. Because each situation is unique, our recommendations are not intended for your particular situation. And as with all tax advice, the key is to discuss your individual strategy with your tax advisor before you take any action. And we're happy to help with that. All right, so enough about me. Please welcome our first panelist, Bruce Phillips. He's the CEO of HPC. Say hi, Bruce.
Hello, gang.
And we've also got with us Laura Ring. She's our Director of Tax Services. Thank you so much for being here, Laura.
Thanks. Look forward to it.
And I really want to say thank you again to both Bruce and Laura for doing this because they're on the East Coast of the US and it is 8 p.m. there right now. I'm a little luckier. I'm in Los Angeles, so it's just 5 for me. So thank you guys for taking some time out of your evening to do this webinar. All right, so let's get straight to it. This is our topic, which I'm sure you're familiar with by this point, how to expand your Australian or New Zealand business to the United States. And today's webinar, it's basically a 10-step program. We've got a slide on each topic. We're going to spend 5 minutes on each slide, approximately. And if you have questions, again, please go ahead and post them into the questions box in GoToWebinar, and I will do my best to answer those or bring them to the attention of Bruce and Laura. So this right here is the 10 items we're going to cover today. Basically, we're going to go in order from all the way from organizing your entity in the United States to staying compliant with your taxes and filings and whatnot and everything in between. All right, so let's get right to it. Our first step is organizing your United States entity. So Bruce, why don't you take it away?
I will start. So the first thing that you want to do is figure out if you need a U.S. entity in the first place. So we've dealt with a lot of companies that come over, and it's always a question of whether they have already set up their entity or whether they are going to set up an entity. And actually, one of the first ones we got back almost 3 years ago formed an entity and had nothing here at all. And it took me a while, because this is at the beginning, how to figure out why they even formed the entity. The interesting story on that one was they actually had to form the entity because they were on Kickstarter. And at the time, Kickstarter only allowed you had to have a U.S. entity and a U.S. bank account. but as we got going more, it really is a good question to decide if you need a U.S. entity or not. And of course, there's a lot of reasons that go into that. And Laura, feel free to chime in anytime you want to.
Yeah, I think one of the important things to remember with that is sometimes part of the reason you want to form your U.S. entity is to kind of not put your foreign entity at any risk. If you start doing significant business here, if you hire some people and you think you're going to just pay them from the foreign entity, you're kind of opening yourself up to a lot of requirements and filings that you may not want to do with that whole foreign entity. So it's just really important to kind of think about that and how big of a footprint you want to have here in the U.S.
I think on that front, we've also had some of the foreign clients that we've had have come here, and their customer or vendor was asking for things or saying, you need to do this for us to do business with you. So that's happened also, especially when you deal with big Fortune 500 companies. They want to deal with a U.S. entity and know that they've got some standing if they need to sue you, basically.
And then how about raising money from investors? Did we talk about that?
Yeah, so there's a really good point on the raising money for investors. Typically, when the people want to raise money in the U.S., and we have clients that have raised money overseas and raised it in the U.S., but the U.S. investors are almost all of them are going to want you and require you to have a U.S. entity. I've seen, I think, one that the U.S. people have invested in a foreign entity, but it's not normal. So if you plan on growing and potentially raising money, you're going to need a U.S. entity. Good question. So next, I'm going to try to stick to the 5 minutes per slide. So where are we? Are we like a half in?
Yeah, definitely. We got.
All right. So in terms of what type of entity to choose, it's actually relatively simple here in the U.S. From a legal standpoint, there's corporations and there's limited liability companies, and of course there's partnerships also, but that's not a corporation. And there's a difference between what type of legal entity you form and then how that entity gets taxed. And we're going to have some more information on that because we're going to do a session on this. But corporations can be taxed multiple ways: C corps or S corps. Generally, the foreign companies can't be S corps because you can't have a foreign owner of a U.S. S corp. But so most of them are C corps, which is what you see and what you hear. However, we do have some companies that form limited liability companies here, and I've seen that a few times. But I think that the real caveat, and if you take one thing away from this slide, is you never want to make yourself personally overseas be subject to U.S. tax without realizing it. We've had several people actually do that. They formed their company here, they put themselves as a shareholder, they were taxed as what we call a flow-through, boom, U.S. filing requirement. And we ended up fixing it for them and changing it, but it's important to get advice. I guess that's the bottom line. So there are multiple entities. I know the entities are different in the UK and different in Australia and different in New Zealand in terms of what they have, but it's important, and most of the companies are just going to be corporations and elect to be taxed as a C corp, which means it pays its own tax versus flowing through to the owners.
Hey, so Bruce,
in terms of,
sorry to interrupt, but we have a question. So Tanya asked, so if as a bookkeeper doing payrolls and allocations in zero for U.S. firms, are we required to be a U.S. registered entity even though we have no employees based in the U.S.?
So it sounds like what she's asking is they're a service provider who's serving a client in the U.S., but they are physically overseas? No, I don't think so, because you don't meet the physical presence test and you're not here. If you were doing it here, different story.
So a few things about the physical presence test, right? I know that if you have inventory that you own.
We actually have a slide on that. So yeah.
Okay.
Yeah, we do. Yeah. So.
That's in the sales tax slide.
Exactly. Yeah. So but we will get to that.
But your point is that if you're a service provider overseas providing services to U.S. customers, you don't have to worry.
No, and typically what you see happen is if you're sending your people into the U.S., you might want to talk to somebody. If you're collecting money in the U.S., you might want to talk to somebody. I think those are pretty. Or as you said, if you have inventory here or any kind of these physical presence, which can mean a lot of things and means different things in different places.
Got it. Well, so we need to move on, but I thought we should mention our favorite state for incorporating entities, right? So we're doing C corps in Delaware, right? And the reason why we like Delaware, Laura, do you want to go into that?
Yeah, and I think it's not why we like it as much as why the lawyers like it.
Right.
There's some real advantages. If we are not the lawyers, but there's some real advantages for the companies if they incorporate there, and I think that's why probably 99% of our C corps are Delaware incorporated, and that's just pretty much the norm of what everybody does. So it's easy to get a registered agent. It's easy to do it. There's a minimum franchise tax that you have to pay every year, but it's not very significant. So it's just the way that things are done.
Got it. And so our recommendation, how should they do it? Should they use one of these incorporation services? Should they do it, should they use an attorney? Do we care?
We think it's better when they use an attorney. We have some very reasonable friends that we know that are attorneys that can do this, and it doesn't have to cost a lot. It just gets done better. I know there's some great websites out there, and I've certainly seen people who have used those, but there can always be a bit of a nuance that you don't pick up on the web, and it's just way better to have somebody who's a professional in this doing it. And I think this is a great time for you to mention our who's on your team section that we have on each of these slides, because that's kind of what we're really kind of encouraging people to think about.
Yes, and so down there at the bottom of the slide, on each of these, we have listed who's on your team in this regard. So we recommend you consult with your attorney. You're going to need a registered agent, and you're going to need a tax advisor to do this right. Great.
Good. Excellent.
All right. So first slide down, let's move on. So we've organized our U.S. entity, right? Now we need to get ready for taxes. So Bruce, take it away.
So the first thing that you're going to need is basically a federal EIN, which is an identification number. And we've helped a lot of people do that, and some have been easy and some have not. And there's some timing issues involved, but at the end of the day, you have to form your entity to get an ID number. You have to have an ID number to get a bank account, which is one of the things we're going to talk about next. So this is kind of the ordering that we like to talk about it. So anyways, the IRS obviously here in the U.S. is federal taxes. It has nothing to do with states or local at all. What you see basically, many of our clients are Delaware C corps, so they're legally formed in Delaware, but they hire their first employee in San Francisco. So that's a norm. So basically, they have an employee in San Francisco. So that is going to give them Nexus, which we're going to talk about a little later. But basically, the first thing they need to do is register to do business in California, because California is an interesting and expensive place to do business. But basically, there's a registration to do. They call it registration of a foreign corporation, and foreign not meaning foreign overseas. It means foreign meaning you weren't formed in California, subject to California's corporate governance laws. So we talk to people about that and where you need to register. But basically, I'm going to let Laura talk about this a little bit because she knows quite a bit about it. But about your, where and why and what are the factors that involve having to think about that. Go ahead.
Yeah. So when you decide to get your EIN from the IRS, and this is probably shocking to imagine, but it's actually a very efficient process, and you can do it very quickly. When you decide to get registered in a state like, for instance, California, it's a pretty slow process, and it can take sometimes up to 2-3 weeks. So when you decide you want to start and then you want to maybe hire your first employee, we want to kind of have those things getting going and in place and started. And then in addition, because there's a lot of layers to tax and there's a lot of layers to sort of the registration process, you may have to register first at the federal level, then at the state level. You might even have to do it local. And you could sometimes even have an additional kind of city requirement. So you really want to sort of have somebody on your team again who can understand all of those different places. And then if you're in a place like California, you decide to hire somebody else in New York, you need to get registered in all of those places, and that can just add time. Where you decide to sort of do that is going to be based on where you feel you're going to have, employees or customers. And we're going to really spend some more time talking about that Nexus, because different states have different prices for not only getting registered, but then the annual requirements. And that's just a kind of an important cost of business you really want to keep in mind before you all of a sudden sort of the meter is running and you haven't even kind of stepped foot here yet. So I think those are really important things to think about.
Awesome.
Very good.
All right, let's move on. Okay, next is opening the corporate bank account. And I haven't yet had to do that for an international client, but I know that it can be quite a pain.
Yes, it can. So if you notice, we said form your company, get your ID number, open your bank account. Well, we have relationships with bankers and banks, and It is true that you might talk to 10 different bankers at one bank and get 10 different answers in terms of what they can and what they will and won't do. But the bottom line is effectively, since the Patriot Act has come in place, the U.S. Treasury has just gotten really stringent about putting the rules on the financial institutions. They really want to meet you and make sure you're real for a lot of reasons. I'm sure everyone can understand that. So we are basically advising people now that you pretty much need to plan to come to the U.S. to open your bank account. We'll stage it and everything for you. We had a gentleman come in from Australia. He basically waltzed into the bank. His paperwork was all done. He waltzed out and signed it. And he has no idea how difficult it is to do that because we did it all for him. But and then we've had other people where they would open a bank account from overseas. Go figure. I don't know how they did it. I don't know what they said to do it. But in any event, those of you who've tried, it's always not that easy. There is the option, and I've seen some people in Australia that actually open U.S. dollar bank accounts in Australia. I've also seen people go into international banks like HSBC and do it that way and open a U.S. bank account. The challenges with that are that a lot of times they have very big minimums, and many small businesses, mostly the ones that we deal with, are not going to keep $1 million in the bank for 6 months or whatever the requirement is, and they do have requirements. So your best bet is to basically get a bank account here, especially if you want to do business here. Regarding the physical address, this has to do with part of that, making sure you are who you say you are and that you're real. Blake had some experience dealing with it about trying to use I don't know if it was what was the name of that place you tried to use?
Earth Class Mail. It's
Mail.
Yeah, I think a lot of people abroad are familiar with it in that it gives you a street address in the U.S. It used to work to set up bank accounts, but the banks got wise to the fact that this was a mail receiving service and that the businesses weren't actually at those locations. So now they don't work for most of the banks.
And it's actually kind of an old rule if you think about it, the way virtual and global businesses work now. It really doesn't that part doesn't make any sense. And I can understand having you walk in the bank and do all that. I don't fully understand the physical address. We barely have a physical address. And we're in the U.S. So, in any event. So pretty much with the bank, you need to prepare to come over here. Another alternative you can do, we've had some people do, is they use their employee or their partner who happens to be here, or sometimes even a family member, but to help them get it open here. But it's going to be somebody here. All right?
Okay, let's move on. 4, setting up your United States back office.
Our favorite part.
Yep.
So, Blake, why don't you start on this? I know you wanted to talk about this, so go ahead.
Yeah, sure thing. So, you're going to need a U.S. accountant because of the regulations. You're at least going to need a bookkeeper. You're going to need somebody to take care of all this stuff for you in the United States. And so, it's important to choose somebody who can work effectively with your accountants back home. And one of the reasons that HPC, I would say, got into this whole business of helping global small business owners is because Bruce was one of the first Xero partners in the United States on the accounting side. And that opened up this whole world of people using Xero abroad, right? So it's very important, for your efficiency and the efficiency of your staff to have systems that work similarly everywhere you do business all around the world. And Xero and Receipt Bank and Spotlight Reporting are all designed to work in multiple currencies in different countries. You're not going to have the hassle of dealing with, say, Xero in your home country and QuickBooks, which is completely different here in the US. It's best to use both, right, and have them be similar. So, the 3 apps that we use Xero for accounting, and we love that because we can set up charts of accounts that are really similar to what you've got in Australia or in New Zealand. We use Receipt Bank. I've got a great example of a client who has 2 Xero organizations, one in Australia, one here. They have Receipt Bank set up for both. And they have a supplier in China who just has 2 email addresses where they send invoices, right? So they have an email address for the Australian entity and an email address for the US entity. They shoot the invoices over to the appropriate address, and everything flows in to the right Xero file.
Nice.
And In Spotlight, we should mention that for the consolidations. Do you want to talk about that, Bruce?
Sure. So the other thing that we do, especially as the companies start to grow, I remember one of our I'll say one of our clients, who happens to be an Aussie. I remember him telling me we were going to do his books in the U.S. and he's actually using an Australian bookkeeper or accountant down there to do that, which we're totally fine with, of course. And he's like, this doesn't do me any good. If I can't see what my total burn is, it doesn't even do me any good. I need it consolidated. So of course we set it up on Spotlight, and he gets a dashboard and reports every month of how he's doing, not only with his sales and development team here, but also his development team in Australia. And that's good. The only other thing I would add about this is that we do work with accountants overseas, and we could care less if they do the books there. In some of the cases, they even do the books here, meaning they do the reconciling. What they hire us for and what we do is we just make sure that, let's just say that the U.S. Chart of Accounts and the numbers are, I don't want to say U.S. compliant, but let's just say that they have all the information that they need to be able to do all the things that need to be done here. So there may be certain things that need to be captured due to this tax reason or that local thing. Basically, I call it USify. We try to USify the numbers and make sure that they can stay compliant. But it really doesn't matter where the bookkeepers and accountants are in terms of the reconciliation. The reason we get involved is we're going to advise you on your tax, keep you compliant, keep you out of trouble, and make you hopefully be able to sleep better and just not have to worry about that stuff. And that's hopefully what whoever you're using in the U.S. will do for you. So
great.
There you go.
So we'll move on to the next item. Before I do, I want to welcome everyone who has joined us since we started. This is a panel discussion. We've got a good number of attendees now, so thank you for coming. And if you have any questions, please feel free to ask them as we go. We'll stop and we'll answer. Don't worry about interrupting. Okay, next. All right, this is a big step. Hiring your first employee in the U.S.
So the horror story on this for us is, it happens, I want to say almost every week. I'm having my employee, he starts in a week, or he or she starts in a week. What do I need to do to pay him? And if you've been listening for the last 22 minutes, you have to form your corporation. You have to get an ID number. You have to get a bank account. And then, of course, you have to set up to do all the payroll with all the payroll numbers and registrations in the state, which we haven't gotten to yet. As Laura succinctly said before, it's not always possible, not because we can't do it, because some of the governmental agencies just don't work that way. Many of them still actually take paper. Is that right, Laura? Where you can't even go online and do it. So in any event, the best thing you can do is plan. Do a little bit of time before you hire your first employee. Now, the other thing that we see with regards to the employees is, well, I got somebody as my country manager, and I'm paying them as a contractor. Now, that may fly in the UK and in Australia, but it doesn't really fly here. The IRS is very stringent, and they're getting very aggressive. And I'll let Laura kind of go into that in a second. But about what is an employee, you don't get to choose whether they're an employee or contractor. It's based on what they do for you and a bunch of factors, whether they in fact are an employee or contractor. And if you pay them as a contractor, and in fact you get audited and look like an employee, it is very expensive, and not a fun thing to do. So, Laura, why don't you talk about that a little bit?
Yeah, and I think the important thing with that is it's not just a federal issue. Again, so many of our companies decide to start in California, which is a great place to do business, but California is particularly aggressive on this issue, and now we have 3 different companies that are being audited for the fact that they used a lot of contractors when they really should have been employees. And we're just trying to really reinforce the rules about that, make sure we can share the guides with you, we can talk you through it. But it really is, if you're going to have somebody kind of working with you on a pretty consistent basis and you're guiding them as to what to do, they really are an employee. And we just want to kind of help you kind of decide to pay them the right way. We have some options to do that. You can kind of self-serve, or we can talk about a PEO, but really kind of getting them onto the right side, whether they're the contractor or the employee, is the first decision. So I really think we should kind of always re-encourage that.
And it's important to say they were not our clients when they were doing that. That was before they became clients.
We are unfortunately helping on the cleanup, though, so it's that's not great.
Not that our clients always do everything we tell them to do, but
well,
that's true, too.
So here's a good question, good question
Oh,
from Greg.
good.
Greg is asking, what if we employ a person via our Australian company but base them in the U.S.? Is there any difference if they were only there for 2 to 6 months?
Yeah, that's
You
a
want to talk about that, Laura?
yeah, I would love to. That's a really great question. And I don't know if you were listening earlier, Greg, when I was mentioning one of the reasons you want to set up your U.S. entity is because you kind of want to keep a little bit of a wall between what happens in the U.S. and what happens in the foreign entity. And we're going to talk about some other requirements for, reporting and things like that. But when you as a foreign company decide to employ somebody here in the U.S., and you have them here, and we can talk about the number of days, it's about 183 days or so, but the IRS then says that this person now has a filing requirement here in the U.S., and you as a foreign entity who's employed that person here has now kind of opened yourself up to more reporting, which I don't think most companies want to do. So we do have a lot of folks who do that. It's not really advised, once again. I know it's a long process, and we're going to talk some more about the kind of the immigration visa issues and things like that. But it's more advised to make sure that they're an employee of the U.S. company and that you sort of treat it that way.
Yeah, so Laura's right. First we get the issue of bringing them over here and getting them in the country on the right visa. That's one thing. Second thing is sometimes you send them over and you haven't even really set up your entity yet, or you're getting the process of setting up your entity, but you don't have your bank account. So we've seen some of the companies actually pay their U.S. employees out of their foreign bank account. I'm going to say we generally fix it by grossing it up and running it through the payroll and doing all the appropriate things and reporting it correctly, even though the money might have been sent from the foreign account. But we tell them what they need to do, and we help them actually also say get it right.
Mm-hmm.
So that was a really good question. I'll take the last couple minutes and just mention a PEO I think it's a professional employer organization. They're really big here, and a lot of our foreign companies choose that option when they come here because it takes care of a lot of the things that are very complex here and time-consuming. So a PEO basically, and a couple of them might be like a TriNet, an ADP, a Paychex, they all have these PEOs. The employees are actually employees of that company, and they use their ID number to pay them, and you're kind of like a co-employer, but they actually provide all the benefits and pay all the taxes and do everything. I mean, it's all-in-one, and you basically pay a set fee per employee, which is their salary, taxes, health insurance, 401k, all those other things that if you don't do it through a PEO, you have to decide if you're going to put those in place yourself. So first thing you have to decide is PEO or non-PEO. There's some issues regarding PEOs, especially some of the big ones. They don't want to deal with companies with one employee because it's like group plan kind of thing. So it can be very difficult on that. We're going to have a separate session on that also. And then if you choose not to do a PEO, there's also what they call, I'm going to call them payroll providers. Companies like Gusto and Zenefits and ADP and Paychex that basically will do all the payroll part of what we're talking about by withholding the taxes, remitting them, and filing all the appropriate payroll tax returns. And they kind of work for us because we use them as part of our client service, and then that's kind of how we make sure everything gets done correctly. But there's also what they call self-serve, which if you were to use something like a zero payroll in the U.S., it's what we call self-serve. So it does all the calculations and all the recording, but it does not file the tax returns. You have to file them yourself, or we would have to file them for you. It also does not pay in all the required taxes, which could be weekly, semi-weekly, bi-monthly, monthly, quarterly, annually. And you have to pay them in also. And believe me, we've been inundated with late payment notices, late filing notices, correction notices. We don't like that for all those reasons. So I think the moral of the story is PEO, non-PEO, let somebody else or somebody else handle your payroll for you. The systems are really good, and we kind of go with that. And if you do choose to build a non-PEO, in one of the next slides, you need to deal with how you're going to provide benefits.
Awesome. So before we move on from this topic, which is a popular one, we've got another question. David. And David is asking, are the rules for employment different across all the states, or is there a general set of rules which applies across the board and then different, particular things for each state?
Laura, you want to take it? No, I'll add on.
Yeah, I would say that the independent contractor versus employee is pretty consistent across all the states. Almost all the states would prefer you treat almost everybody as an employee because there's a lot of advantages for them with collection of payroll tax and things like that. as it relates to unemployment insurance and that, there are some differences at, with the rates and things like that. There are some differences. There's some slight employment law differences and things like that, but overall, it's pretty consistent state to state, with some minor tweaks here and there. But most of our companies that are in sort of California, New York, Georgia, Texas, and places like that, it's pretty much the same between all four of those.
Great.
I would actually say that they're not the same from a different angle. So they all have unemployment insurance. Some states require you to pay different fees on behalf of an employee. I can't remember exactly what they are, but the different states have that. But what I was thinking about is more like the Fair Labor Standards Act and how you have to treat employees. And there is a federal, what do they call that? Because we had to deal with this recently. The federal laws related to that. And then in each state, there's different rules. So, for example, in California, this is a nuance. If you were to let an employee go, they have to have their paycheck on their last day. You can't send it to them a week later or a month later. That's specific to California. And unfortunately, it's very complex to know. We don't even know all the rules in every state for employment. So we have a service that helps us, that does all the research and does everything. And I'll say there's a tool for that. The tool for that for us happens to be Zenefits, which again is an online platform that works the way we work and does a lot of that stuff for us. But I think from that perspective, the labor rules are definitely different by state. Some are right-to-work states, some are not right-to-work states, some you can fire anybody, some you can't. That's kind of more what I was thinking about with regard. I'm not sure if that was the way the question was, but that's kind of what I was thinking about.
Yeah, and I think that what the question is, and what this reminds me of is what Uber is going through right now in California with the labor board, right? So other states don't have a problem with Uber classifying its drivers as independent contractors, but California might have a big problem. And California is a big enough place that Uber might have to change the way it does business, depending on the outcome of these class action lawsuits.
So I think the moral of this story is it is complex to do business in the United States. There's many, many, many jurisdictions, and it's almost impossible to know everything. But you need to at least know where to go to find the answer. So.
All right, next topic, getting your business insured, starting with workers' comp.
So workers' comp is kind of a carry-on to the payroll because I believe almost every state requires you, as an insurance commissioner, and requires you to have workers' comp insurance in case somebody gets hurt on the job. Some of the services will do it for you. In other cases, you could get it through your insurance provider. There's multiple ways to do it, but you will be required. And I think even when you fill out your forms for the states, you have to say something about your workers' comp. So pretty easy in our job because we're desk jockeys, but we're not construction workers. But depending on what you do. So the other thing in the U.S., the reason it's so important for insurance is, I'm sure you all know, I think the U.S. has more lawyers per capita than any country. Hope there's no lawyers on here. But it's a very litigious society, and you need to protect yourself. And the way you protect yourself here is with insurance. So should we go ahead and make our little announcement?
So HPC has partnered with a longtime insurance provider. Bruce, you've had this relationship for over 25 years. And we had so many clients asking us for help with insurance, and we really couldn't help. So we decided to create this partnership. And so the insurance is called HPC Insurance Services, and it's a referral relationship to our provider. And they can help you with all of the insurance types listed here, from commercial property all the way to commercial auto insurance. They do everything in all 50 states. And we'll be putting that up on the website shortly because we just finalized that this week.
Yep. So this is kind of a biggie because almost every company that comes from overseas some of them haven't even thought about this, but when they do, they have no idea where to go. And who do they ask? They ask us. And so we're just going to refer them out. So we said, you know what, we might as well do this ourselves with somebody that we trust, but we already know what's going on. This is a financial thing. Let's just take care of it for our clients. So we're really happy to be able to make sure that you can do some risk management here in the U.S. too. So making sure you have directors and officers insurance, making sure if you're in the SaaS business, you get the cyber liability insurance, all that good stuff. So very important here in the U.S. for the reasons we've talked about. Probably important overseas too, but.
Okay, moving on.
All right.
We're
doing good.
Yep, we're doing great on time, right on the 5 minute mark for each of these slides. So we'll keep on going. Again, if you've joined since we started, we are doing 10 steps to bring your business to the United States, and we're spending about 5 minutes on each topic. Please feel free to post questions as we go, and I'll be sure to give them out to Bruce and Laura to answer.
Awesome. So we touched on this on the payroll, but when you hire your first person here, the first thing they're going to ask is, what are you going to do for me? I need health insurance. What's your paid time off policy? I need a retirement plan. And I don't know if I was talking to Blake this morning or Laura this morning, but we're talking about where in Australia and a lot of other places, this stuff is all kind of taken care of for you. It's mandated by the government. That's not really the case here. So it is different, and you're going to have to deal with it. Yeah,
you and I were talking about that, Bruce, and it's a funny story because it's our client that I had in my bookkeeping service. Dan came from Australia, and when he got here, he was just blown away by the fact that we do not have any mandated paid time off federally in in the United States. So it's completely up to the employer whether or not they're going to give holidays to employees, like Christmas is not a you don't have to give that off to your employees. You don't have to give them vacation. It's up to you. So it was tough for him when he hired his U.S. employees because they kept asking him, "So what's the vacation? Right? What do I get? What are the holidays?" And he was used to it all just being taken care of. So we advised him a bit on that.
So a lot of the companies now are putting in these unlimited time off or discretionary time off, or I don't even know what the heck you call it anymore. But that's kind of a popular thing with progressive companies, I would say, for a quality of life. And work and personal life has kind of merged, I think, for a lot of people. And I think that's kind of a neat thing. We actually did that, and I saw a post on LinkedIn the other day where it said it's not. You put discretionary time off not so you can figure out how much time they want to take, it's so they can't take any time because they give so much work they don't have time to take the time. I thought that was funny. So basically, it's like a disincentive for your employees to take off, which I thought was kind of funny. But in any event, I think you all kind of get the gist here about these things are different here, and you need to deal with these. If you use us or something like a Zero and Gusto or Zero and Gusto and Zenefits or whatever, a lot of this stuff, they have the manuals, they have a lot of the stuff with some templates and stuff that can actually help. And we actually help people do some of that too. This really kind of falls under the HR piece, which as accountants, at least when we first started this, we got tons of HR questions, and I was like, we're not in the HR business. But we just can't avoid the questions. So we partnered with a company like Gusto and Zenefits. Laura, why don't you talk about the pre-tax benefits and the fringe benefits and what that means here?
Yeah, sure. So the one really nice thing I think about the U.S. system is that there are a number of things that you can provide to your employees that is not only a deduction to you, but actually is done sort of pre-tax for them. And so it actually has some things, whether it's you decide to, you're going to give them some, whether it's vision or some healthcare related benefits and things like that, that they can actually take and pay for these services, and it doesn't have to come necessarily with the tax burden on it. And the one that I love the most, of course, is the retirement planning one, because that is a great way to get a lot of deduction for a company. It reduces the tax for the employees. It's a really great thing to do. We've set some pretty high limits here, so you can give up to almost $18,000 a year of your paycheck and put it towards retirement. It's great if you're not going to be here in the U.S. forever, because then unfortunately you may not be planning the same way for retirement. But if you're hiring folks here in the U.S., it's actually something really important to think about. The one big difference I've seen, though, is that there are some things that that companies coming into the United States sometimes want to give to their employees that we actually consider taxable. So that's the one thing we always really want to advise people on. We understand, of course, you're bringing somebody over here. Of course, they need a place to live. Of course, they need a car. Totally can provide that to them, but it actually is considered a taxable benefit to them. What that means is that they're not going to pay the money for it, but it's like they've paid the money for it. So it's going to gross up their W-2, which means the tax that they pay on that is going to be higher because of the fact that they got that benefit. And that's something really important to kind of think about. It can be a little bit of a surprise to the employee if it wasn't explained to them early on that, we are going to pay your $3,000 a month, rent in San Francisco, but at the end of the year, that means you've actually received $36,000 of salary, and that can be a little bit of a surprise. So we just, we can talk through that. There's some different strategies we can employ, but you really want to think about it as you're kind of thinking about that full package for them and what it's going to cost them.
That's not a fun conversation after the fact.
No, it's not. And the IRS is pretty serious about it. So it's one we want to have before.
And did we want to talk at all about reimbursing employees for health insurance, right? Because that's something that can get you in trouble now.
Yeah, that used to be a really great way to do it. And when we came out with the new Affordable Care Act, that was one of the things they really shut down for us. So, before it would happen, you kind of tell your employee, hey, we're not big enough to actually buy this ourselves. You go out and find something, tell me how much it is, and I'll reimburse you. And you just can't do that anymore. You can decide to purchase it for your company and get it through. There's some great options, even if you have to have at least two, but as long as you have 2 employees, or you can decide you're not going to provide that if you have less than 50 employees. Your employees are required to have that. But if you want to gross up their salary, you can do that, but you can't just say, oh, it's $400 a month, I'm going to give you $400. They won't let you do that anymore, unfortunately.
And if you wanted them to do that, you could just basically say, I'm giving you a raise of $400 a month, and smile. Don't tell them it's for health insurance, because you can't do that. But you can give them a raise because you can pay them whatever you want to pay them. And if they want to go, now you can't mandate that they use it for the health insurance, and they don't even have to tell you if they bought health insurance, but that's one thing you see people do.
Interesting complications. All right. Anything else? Shall we move on? All right. We'll go on to number 8. Okay. Getting your visa for the U.S.
So this is one that's kind of a little bit difficult for us to talk about, because here the immigration and visa rules here are very complex also, like everything else. We happen to be accountants and tax people and technologists. We're not attorneys. So we actually work with attorneys, and frankly, many of the clients that come to us have already got a immigration attorney that they're working with on their visas. We know enough to be dangerous. We know about the L1s and the different kinds. We know about the E-visas from Australia. We know about the HB1s. But at the same time, we're not going to advise you on the visa stuff. But other than to say that make sure you get the right kind and that you get a good immigration attorney, and make sure you just haven't come in and overstayed your visa or come in as a tourist and start working. That's not a good thing to do. We will partner with good immigration attorneys to help. Obviously, it's a good source for us and good for them, because most of the people that come to them need all the things in addition to what they do. But we recommend you have one, and there's a lot of good ones. So, and they're all over. So, you want to kind of talk about the Social Security requirement?
Yeah, the other thing I was going to say about that too is it's important that whatever type of visa you get, you understand that. Some of them have some different requirements about what kind of income you have to earn, how much income you have to earn, and things like that. And we can get down to the end of the year and all of a sudden start worrying about that, because we don't want to have anything happen that all of a sudden puts your visa in jeopardy, because obviously it's been very difficult for you to get that. You do have to have a Social Security number to be able to get paid on a W-2, a 1099, or any of those things, and to file your tax return. So that's an important part of the process to get. It can take a very long time. So you want to work with the right attorney, you want to have the right visa, and you want to really follow. You need to follow for that, because there's nothing worse than after all that time not having one step go the right way, and then you're still without your Social Security number. And that really hampers you from a lot of things in the U.S., unfortunately.
And I would say there's also rules regarding whether or not your spouses can work, and what to do with your children and all that other kind of stuff. But your immigration attorney will kind of help you with all that. So, and last but not least, credit card.
Establishing credit.
Yeah. So one of my actually best friends came over here from the UK, and basically he got here and was like, oh, well, I'm going to go get myself a car. No, you're not. Because he couldn't get a car loan or lease a car because he was from overseas. So there's always a challenge with some of those things about getting a lease on things, and I think it's a smart idea to start establishing credit, especially if you're going to stay. So there's sometimes people use their relatives. Sometimes people get these secured credit cards, especially through their companies, to start establishing credit. It's just a good idea.
And one way that you can do it, if you have a relative here, right, is get them to make you a cosigner on their card or one of their loans or something. If you do that early enough, that'll build up a credit history with a social.
After a little bit of planning, you could do that even before you get here, and maybe have some credit when you get here. I didn't even think about that. Good point.
Okay,
All right.
moving on. Understanding Nexus and filing requirements. So
I'm going to let Laura do her thing here.
this is a big one.
Yeah, so Nexus is a word you'll hear when you start having conversations about taxes here in the United States. And this is as it relates to where, and we had talked about kind of the footprint that you put down. Where is that footprint going to be, and what is it going to be? So obviously, if you hire an employee, that is definitely Nexus. If you open up warehouses and you put inventory or equipment in different places throughout the country, in those states, you now have Nexus. If you use Amazon as a reseller and they're distributing for you, you have Nexus because they have warehouses and they're doing that for you. So there's a lot of things that you can do that all of a sudden put you into a number of different states. The thing we always advise our clients is if the best person that you need happens to be in New York and you can't grow your business without it, you're going to now have Nexus in New York. And we can work around the compliance, so do what you need to do to grow the business, but just keep in mind it means you might be filing a return in New York, you might be filing a return in California, you could end up with something down in Texas. You might just have kind of a broader space that you want, and that's fine. The thing to then think about is different states also tax things differently. So in some states, for instance, California, they don't yet for sales tax charge you if you're going to have a SaaS service. But if you're in someplace like Texas or someplace else, they might. So once again, we never advise anybody to make their decision based on the fact that, I don't want to do this in one state because I might get taxed on it. But just when you decide you're going to go into the states, let us know or let your advisor know, and then we'll tell you, okay, well, if you do that, this will be a taxable event for you. You're going to have to think about sales tax, and then you have to decide whether you want to do that on your own or use some of the tools that are out there. And you can kind of just start to think through that process. But it's just something you want to think about in advance and realize what your cost of doing business is going to be.
Got it. And one of the reasons that it's so difficult to deal with sales tax here in the States is because we have so many different taxing authorities and jurisdictions, right? I read an article that said there were almost 10,000 of them.
Yeah, I know, and especially once again in California, which so many people want to go to. They have different rates based on where you're based, and that can be different from San Francisco down to San Jose down to LA. It's just all different. Fortunately, and thank God for all the cloud-based services, it's gotten so much easier than it used to be. So it's very manageable. You just have to think about it in advance and get the right tools in place.
So at HPC, we take care of sales tax for many of our clients. We do everything. If you want to do it yourself, like Laura said, there are some great options out there. Avalara, TaxJar, and Taxify are three applications that we've used that help you figure out if you need to collect sales tax where and how much to collect and how much to pay. So definitely check those out. Good. Yeah.
It may not be the best use of their time, but they can definitely do it. Yeah.
If you want to see a fun map, go to Avalara's sales tax lookup page because they have a map of all 10,000 jurisdictions.
Mm-hmm. And the biggest thing I'll say about sales tax too is that it can generate more revenue. So we are seeing states change the rules of what before wasn't taxable now becomes taxable. SaaS wasn't taxable in very many states. It's now slowly being added. So the other thing too is it's not something you can kind of decide at one point like, oh, this is never going to be taxable and I'm all done. We do this on a quarterly basis, review it for most of our clients just to see what's changed because it does change pretty quickly.
I don't know if you remember, Laura, but when you started back when we had a company from the UK come over at the state of New York, and they were taxing their IP invoices from overseas, and I was like, you have got to be kidding me, because they were using the IP in the state of New York. And we had a big argument about how their contract read and how their invoice read, and whether or not it was being used and delivered in New York. Sales tax audit.
Interesting.
We won, of course, but that's just an example of what Laura's talking about. So.
Yeah.
All right. We've made it to the final step, step 10, staying compliant. And This is the tax domain.
Laura, take it away.
So as we kind of talked about before, there's a lot of layers to tax, and one of the things that's important to do as you kind of think about staying compliant is it's really important to think about the different places you're going to have to file, how frequently you're going to have to file, and then sort of what is the information you're going to need for that. And so, obviously, if you set up a C Corp here in the United States, you're going to have to file a corporate return. If you hire employees here and they are here more than 183 days and other criteria, they're going to have to file a personal return. There's also, and some of those will have taxes applied to them and some of them won't. We also have something else that's a little bit interesting here in the United States. We actually have a number of what's called informational returns. And what's kind of funny about some of these is that, for instance, if you don't issue a 1099 to a contractor that you used, even though there's really no tax associated with that, you can actually pay a penalty for issuing that 1099 late to them. Or excuse me, at 3921, if you did some options, there's a penalty. If you don't, all of these different information returns that the government uses to kind of assemble other information, they can have almost worse penalties than the tax returns. So the biggest one, and this is the one that can sometimes be a little bit overwhelming for people to think about or even to want to think about, is that when you do decide to start to have a presence here in the United States and you have a company here in the United States and you're either, maybe your foreign parent is providing money to you and they've given it to you either as a loan or an investment, you're going to have to sort of let it be known how much you've received from them and file some additional forms, because the U.S. government just wants to understand where your money is coming from, what form it came in, and sort of how much it is. And those forms in particular can have a $10,000 penalty if they're filed late or if they're filed really incorrectly. So these are the ones that we really, really want to encourage people to think about. Timeliness matters a lot here. It's if you're a day late with that 5472, it's a $10,000 penalty. They'll have that notice out. It's like they wait for it to be late. So we just really want to encourage people to kind of think about that and to really let us know what you're doing, and then we can kind of help and make sure you get all of the right filings done. And I know Bruce has got some great stories of people who have done that well, and then those that forgot to call.
I was going to add something on the reporting, the information reporting. They also want to know transactions back and forth, not only loans and capital, but if you're buying goods or providing services, management services, licensing of IP, they want to know all that because they want to make sure you're not siphoning all the income out of the U.S. There's some that's where all the planning comes in to tell you, this is what you need to do, this is the agreement you need to have, this is how you need to do it, and this kind of gets into that whole global tax advising where all of their clients, whether they're operating in UK, Australia, New Zealand, and US, they all want to have the minimum tax burden kind of as a whole. But it doesn't just happen. You have to be thinking about it and you have to be smart about it.
Yeah, and the other thing it's important to remember too, there are certain dates that you can do things by. So if you have a year end that you decide, say you decide it's 3/31 or 6/30, some of the cash that you have to move around has to happen by that date, so we can take those deductions. And we really kind of want to make sure we do that planning before it gets to the end of the year as opposed to after, because it can limit our options. And then, unfortunately, it could mean that you end up with tax that you don't want to have.
Correct. Good. Yeah. I think that's a wrap.
So
3 minutes.
We made it all the way through.
That's amazing, actually.
And with 1 minute to spare.
Wow, right on the number.
So thank you, everyone, for coming. Before you go, I wanted to let you know that we have just today published a lot of this information now as a guide on the HPC website. So we go into quite a lot of detail, more than we were able to cover today. So please check that out. It's at hpccpa.com under the Resources tab. And we look forward to hearing your feedback on that, and we'll continue to expand it.
I'm smiling. Someone just tweeted, "Awesome webinar." Thank you, Steph.
We're really glad you liked it. That sort of feedback is great to hear.
It is great to hear. we were going to kind of let everybody know our Twitter, and so they want to follow us and go to the website and all that kind of stuff too.
Yes.
If you want to.
I almost forgot the final slide here. So yeah, we are on Twitter at hpccpa.com. Sorry, at hpccpa, and then our website is hpccpa.com. Bruce has the Twitter account on his phone, so he's right there listening to everything that's going through on that account, and he'd love to hear from you. And if there are questions that we couldn't answer for you on the webinar, please feel free to reach out to us. We're going to be doing more of these in more detail, and now you're on that list, so we will send information out to you. Again, link to this webinar, the slides, and follow-ups to future webinars on these topics.
And we'll do some deep dives into these topics because we could have talked in hours on a couple of them. So we plan on getting more of that, and then obviously providing the information out there to help you educate yourself a little bit and educate your clients. And I think it's good for everybody. So,
all right.
Thank you for coming. Good
Thanks.
job, Blake. Thank you.
Thank
Laura,
you, Bruce.
Good
Thank
job.
you, Laura. Thanks, everyone, for coming and helping us promote this. We appreciate it. Good night.
Okay, thanks, everybody.
Thanks. Bye.